Hello everyone, happy Monday. The SPX has 3 closes above this major trend line that we've been monitoring. So in today's video, we're going to be taking a look at the SP500, the NASDAQ, the Russell, the dollar, the bonds, the VIX, the yields, all that good stuff. And without further ado, let's get started with it.
Oh, Hamid, I remember when you said you would never charge.
I do too, buddy. But if I am charging, you better believe that it is some high quality stuff. So last week I had a 92% success rate, which is pretty hilarious to me. And then today, to go along with what happened last week, today we had a 90% success rate. So if you want access to the Discord, the link is in the channel description as well as in the comments. And God bless. If you want high quality trades, you know where to go. All right, so let's continue on with the video. So let's start off with Nvidia. And what I want to do is I want to look at the AI related and chip related stocks. So Nvidia, I was showing how 460 would be a very, very important level. And we could see that we have closed below 460 on Nvidia. But now what's interesting is that the lower Bollinger Band is very, very close to the bottom here on Nvidia. And things are looking very close to bottoming out and bouncing on Nvidia. So that's what it looks like on Nvidia to me, in my opinion. We should get a bounce off of at least 445, 450. This whole area down here is a good opportunity to go long, in my opinion. AMD, we could see some more weakness. Obviously not as much as Nvidia, right? But then Google is very, very interesting because Google is also one of the chip AI related stocks that bounced because of AI, right? So now it's also trading. It broke out a bit lower of the Bollinger Band, which is all basically hinting at some sort of a short-term bottom. Microsoft also had a big move to the downside, obviously not as bad as Google, but all of these chip-related stocks are taking a hit. Okay, so now let's go ahead and just take a look at the rest of the tech stocks. So Apple relatively doing better. Tesla relatively holding, right, doing better. Meta doing which like it had a green day. It was really, really bad intraday, but it had a bit of a bounce. Once Meta broke below 337 and broke below 326, this was really, really bad, but it's also leaning towards a bit of a bounce, very similar to Nvidia. And then Amazon is also holding support at 143.60. So Amazon, Tesla, Apple are all doing relatively better than these AI related stocks. You can also take a look at Netflix. So Netflix is thankfully, hopefully it'll go to zero, but Netflix is getting a bit of a dip. It makes sense. There should be a bit of a dip. It's healthy, right? So overall tech stocks, even in terms of looking at how tech performed today, tech stocks took a hit. When you're looking at the NASDAQ, it was the biggest loser. So, makes sense. But now, a trend line that I really want to look at is this uptrend line that we had. It's essentially going to be around 379 to 382 for this week. And I'm going to be very interested to see if we get a pullback to that level this week. I don't know if that's going to happen, but the longer we can remain high like this on the NASDAQ, the higher chance that the lower level of the Bollinger Band is going to be increasing. And it will cause, basically, like as we stagnate here, the lower Bollinger Band is going to be sharply rising for the next few days. And then, if we have a big move to the downside afterward, then the Bollinger Band, eventually the price will be trading outside the lower Bollinger Bands, and then it'll just be very aggressive to the downside. And then, that could end up leaning to a bit of a bounce also. So if Nvidia and Facebook start to bounce, that will give more time for the lower Bollinger Band to increase, and that would actually be in the longer term, that would be way more bearish, in my opinion. So the most bullish case for the end of the year into January, in my opinion, would be if we just continue to fall. If we just continue to fall here, this would end up leading to a nice, healthier bounce. But the longer we stay up here, if we show some strength in the short term, that is not bullish in the long term, in my opinion, because we need a bit of a pullback. This is not strong enough of a pullback. So those are my two cases, okay? So there's that for the NASDAQ. Let's go ahead and take a look at the IWM. So the IWM is clearly showing a lot of strength. We have major resistance on the IWM at 188 to 190. And it's showing a lot of strength. You could see that it's pushing up against the upper level of the Bollinger Band. And the Bollinger Band, we're still trading relatively inside of it. So it would need extreme moves to the upside for it to even be overextended. And I don't think that's really going to be the case. Right now, the IWM is showing a lot of strength. We're seeing a lot of bullish flow on the IWM as well, which is, really incredible to see as well. But the IWM is definitely showing the most strength. And today, obviously, the tech showed the most weakness. So now the dollar is starting to break out a bit. It's showing, it's breaking out of its falling wedge pattern that we've been monitoring. It had a big move to the upside, a bit of a pullback, and it looks like it's continuing. So obviously, when the dollar is showing strength, because it has an inverse relationship to the market, when the dollar shows strength, it's bearish for the market. So if the dollar continues to rise like this, then we have to see some sort of weakness out of the market in general. Also, we could take a look at the yields. So the yields also have an inverse relationship. The yields are not showing as much strength as the dollar. So the yields, they're at the upper level of the falling wedges. So we need to see if it can start to break out above. If the yields end up being bullish, then it is also bearish for the overall market. So we have to just keep our eyes on the yields moving forward as well. But then finally, what's interesting is that the VIX is starting to, the VIX finally closed above 13. Obviously, 13 is a nice little psychological level, but then 13.50 and $14 are really the levels that if we break back above on the VIX, then it's going to be a bit more bearish. The momentum can start pushing downward on the market a bit more because the VIX has an inverse relationship to the market. So if the VIX is rising, then that's obviously bearish. And it's just not, this isn't as much strength. So the VIX and the yields are not showing as much strength, but the dollar clearly is. So it's going to be interesting to see, how much strength there is going to be moving forward into these two. All right. So there's that. Let's go ahead and take a look at the S&P. So the S&P is the main stock that we are trading. And it's been amazing how well everything is working out. I am doing really well. And this is basically a norm. I don't do badly usually. So, I mean, this is a norm in terms of, how I really do. The issue with Wave was that, it wasn't able to occur instantly. So the thing with Discord is that these trades do come instantly. So it's much easier for people to, follow along. If you're trading options on the S&P, by all means, join the Discord. If you're trading futures, you could trade futures on the ES according to my signals as well. So it works out either way. So definitely take a look. I would love for you guys to join the Discord. And if it wasn't a high quality service and if it was not doing well or making people money, I would not be sharing this with you guys. I would not be sharing this with you guys at all. All right. So it's doing really well. Hope to see you guys in the Discord. Let's continue on with the video. So this is a seasonality chart of the S&P heading into mid-December to basically the first half of December is generally known to be very choppy or bearish, especially election years. So I'm expecting a bit of a bearish or choppy first 2 weeks in the market, which should end up giving us a bit of a pullback. But overall, all of this stuff leads to a bullish end of the year and bullish beginning of January. All right. So far, that is something that I want to show you guys. Now, when looking at the charts, this is not what bulls want to see. Right? We had a big wick to the upside. We couldn't break back above Friday's highs. We almost hit 460, right? But we had a bit of a pullback. We opened up red, and obviously, you know, we could not close to green, unfortunately. So this is not really what bulls want to see. But what is actually, you know, technically good is that looking at it on the SPX just chart, we have 3 closes above this major trend line. And we've been monitoring this trend line for quite some time now. And when we have multiple closes above a trend line like this, it further solidifies that it acts as support. So, you know, it's going to be interesting. It's going to be really, really interesting because, first of all, this is not really a setup on the SPY that you would want, right? Because we have a wick here. This is pointing towards a bit of weakness. This setup usually leads to some weakness. But, you know, given how strong the market has been over the past 2 weeks, it's going to be tough. But that's why we are still holding the 2-month outputs, scalping intraday. And, you know, like we're just monitoring the dollar and the VIX and the yields. The dollar is showing strength. The large tech stocks, AI-related stocks, have been showing weakness. But still, with that weakness, the SPY is still holding relatively strong support. The NASDAQ is still holding relatively strong as well. And, you know, now these chips and Facebook are leaning to a bit of a bounce. So it's going to be interesting. Definitely, you know, not the time to be bearish for a week out. It's way more safer to be bearish for a month and a half, 2 months out in our case, right? So, yeah, that's my thought process. I hope you guys enjoyed today's video. Please make sure to like, comment, subscribe, do all that good stuff, and I will see you guys bright and early tomorrow morning. Thank you.